Good afternoon, everyone, and welcome to the Apollo Group Investor Webinar. Today, we are joined by Apollo Group, and the speakers are Apollo Group CEO Toomas Tiivel, CFO Aleksei Kadyrko, and member of the Supervisory Board Liisi Satakov. We will begin the presentation with an overview of Apollo Group and the Apollo Group bond offering, followed by a Q&A session. If you would like to submit questions to the presenters during the presentation, please use the Q&A section located in webinar menu by clicking the Q&A. And with that, I would now like to give the word to Apollo Group CEO, Toomas Tiivel.
Yes, thank you, and good afternoon and very welcome to this webinar. So we will briefly talk about who we are, what are our plans for the next 5 years, how we run our business, and also about the bond itself. But before we start, I need to say that this webinar is for informational purposes. All interested parties are kindly asked to review the prospectus and the bond terms on our website, and if necessary, then consult with a professional advisor as well. But back to the Apollo story. We recently celebrated our 25th birthday. As end of 2000, the first Apollo bookstore was opened in Tallinn Old Town. And since then, we have been adding first the cinemas to our portfolio and then different restaurant concepts. And we have become a group of companies, as we call ourselves, entertainment business. Entertainment is combining eating and entertainment. And thus we are bringing those two words together under one brand. As of today, we have grown to 170 locations wide company. We're operating in 4 markets: Finland, Estonia, Latvia, and Lithuania. And even if our business started from bookstores and restaurants, today around 70% of our business is lying on the restaurant area, restaurant concepts. And also, if you look further, then we also see a biggest growth in this segment. But we will talk about everything in a while. We are today operating 10 different brands or concepts. And when choosing the concepts to our portfolio, we are trying to follow a kind of full dining out spectrum or a 360 degrees view on those concepts, meaning that we aim that our customer can go out and dine in our restaurants 7 days a week without getting bored. And we are also looking that we are covering the different areas from the restaurant business, as we have a American quick service restaurant of KFC. We have a family bistros, Lido and Delano. We have an Italian pasta concept, Vapiano. Italian pizza concept, Pizza Restaurant Cancan in Lithuania. Also sushi concept and the small cafeteria called Blender, besides our cinemas and bookstores. So yeah, when combining the portfolio, we are looking at those different brands and different concepts complement each other and also give us a certain synergies. About numbers as well. Financials on the upper row are from the last fiscal year. Our fiscal year is somewhat different from the calendar year. So it starts from May and then ends in April, which means that the figures, the financials are from April 24, sorry, from May 24 till April 25. We posted the revenues of 227 million and EBITDA of 40 million. We made a net profit 3.8 million. and we have total assets of 241 million in the balance sheet. About operational figures, as already been said, we're operating in 4 countries, Finland, Estonia, Latvia, and Lithuania. We employ more than 4,000 people across those markets and operate 170 units. And last but not least, we are very proud of our loyalty concept, which is called Apollo Cloud. We have already reached 1 million loyal active customers, and active customer means the one who has made a purchase in one of our businesses during the last 30 days. Moving towards our portfolio. Here you can see the split between the markets based on revenue and based on the number of units. And Finland is still the smallest market, representing 6% of revenues and 10 units, 8 KFCs and 2 Vapianos. So we are operating with our franchise concepts in Finnish market, but we expect to achieve the highest growth in the Finland. So in 5 years, we believe that Finland could represent around 20% of our group revenues. And then Estonia as our original market, home market, with most of the units. But if you look at the revenues, then Estonia and Latvia are quite similar revenue-wise, representing both roughly 40% of the revenues. And in Latvia, we have also our biggest brand in our portfolio, Lido, which is a family bistro. So Lido is generating a significant revenues in the Latvian market. And Lithuania is the 3rd biggest market with 14% of revenues. But when it comes to the Baltics, then Lithuania is expected to be the biggest growth market in the Baltics. We have divided our portfolio into 3 different segments. The biggest one are the proprietary restaurants. As been said, that Lido is the biggest one. And recently, end of last year, we acquired in Lithuania 2 concepts, which are Delano and Kankan. Delano is very similar to Lido, and we believe that this is one of the growth engines in the Lithuanian market for coming years. And then our own sushi chain and then a small cafeteria chain in Estonia, Gotblend. Then franchise restaurants represent 30% of our revenues. We have exclusive franchise of KFC and Vapiano in all those markets, which means that we are the only ones who are operating in those territories under these brands. And also KFC is one of the biggest or has one of the biggest growth potential in all 4 markets. And then the entertainment segment, where it all started from, today represents only around 30% of the revenues, consisting of bookstores and cinemas. So yeah, as been said, already today 70% of our revenues are coming from the restaurants. And if you take a closer look on the restaurant portfolio, then as said, the biggest segment is our own restaurants with almost 93 million of revenues, close to 16 million of EBITDA, and more than 2,000 employees. And biggest one is Lido here. We're operating in Latvia and Estonia currently, but also we are looking to expand this concept to Finland. Lido's very similar sister or brother is a Delano operating in Lithuania, and one of the biggest growth potential in that market, and then a few other brands. With franchise brands, we are currently operating KFC and Vapiano under the exclusive franchise. So Apollo Group is the only one who is operating those concepts in those 4 markets. And the franchise restaurants are generating 68 million of revenues, close to 9 million of EBITDA, and employing more than 1,200 employees. And then the entertainment segment, with cinemas, we're operating in all 3 Baltic countries with 19 cinemas and in total 94 screens. And the bookstore chain is currently only in Estonia. We don't have any intention to go abroad with this one, but here in Estonia, it gives a significant addition to both our business volume and our brand presence. And this entertainment segment makes 70 million of revenues, 14.5 million of EBITDA, and employs close to 600 people. As been mentioned in the beginning, we are quite proud of our loyalty program, which is called Apollo Club. We currently have reached 1 million members, and the number of active members is growing more than 7,000 per month. So this is the net growth. And those loyal customers are making a significant part of our sales, starting from 55% in the restaurants up to 80% in the cinemas. And here we also see a significant potential because a couple of our businesses are not yet linked to that loyalty program. For example, we are working to connect the KFC to the program, as well as Lido in Latvia and Delano and Kankan in Lithuania. So we have a significant potential beyond this 1 million members when those all concepts will be connected to the loyalty program. And how we see is that we are able, based on the existing consumer data, we are able to implement the kind of database segmentation and then send targeted offerings to the customers. We are implementing the automated direct marketing initiatives, and also customers are very, very fond of our cross-brand benefits and gift cards, which as a result gives us a bigger basket size and more frequent visits. So this is quite important cornerstone for our growth in the future as well. And if you look at the coming 5 years, about our extension plans. So as been said, we are currently operating in 170 locations across those markets. We aim to add at least another 130 new locations, which means that in 5 years we expect our footprint to be around 300 locations in 4 markets. And roughly 75% of this growth is expected to come from organic sources, meaning that we are expanding the existing concepts in the existing markets, building just the new locations, and around 25% is expected to come from the new concepts and added businesses, either started from scratch or via M&A. And Finland today represents 6% of the revenue, but we are expecting to grow it up to 20% of our group revenues. And the growth is driven by existing franchise brands, KFC and Vapiano, and we also intend to introduce Lido's brand in the Finnish market. Then Estonia, we are still looking for selective organic growth across the segments, meaning that if a suitable location is opening, then our concept fits to that place, then we are definitely considering expanding something. And in Latvia, where the biggest business related to Lido, Lido's business model is based on the central kitchen, and the current central kitchen is working at its peak capacity. So we have started the construction of a new central kitchen in Riga, which should be opened in the middle of next year, let's say mid-2027. And then it almost triples the production capacity of our central production, which means that this enables then the further expansion on Lido, also the expansion of Delano in the Lithuanian market as well. It will serve our other brands. So this central kitchen in Riga is also an important cornerstone, building the further efficiency in our businesses. And Lithuania is the biggest, has the biggest growth potential in the Baltic market, mostly with Delano and perhaps also KFC concepts are the main drivers for that growth. Right. Now I will give floor to Lizzie. She will talk about our governance structure and then how Apollo Group is managed.
Thank you. So hello also from my side. A few words about the governance structure of Apollo Group. So what we can say is that Apollo Group has 3 layers in its governance structure. First of all, regarding the supervisory board. In the supervisory board, we have 4 members. The chair is Mr. Ivar Vendelin, who's the original founder of Apollo Group, and he has a very valuable experience and competence in terms of finding and introducing new innovative brands and concepts. The second member is Ms. Kristel Volberg, who is the representative of the owner, Group. She's the board member of Group, and she brings the very valuable experience in terms of different M&A deals across various industries. The third member is Mr. Christian Maros, who has a property management background. He's responsible for managing the rental agreements across the whole Group. And before he joined Group, he was actually responsible for managing the Estonian assets of Citycon. He also has experience with the Finnish market, and he also speaks Finnish. And the last member is myself, and I basically bring 20 years of experience in the banking industry. Now, moving on to the management team. So in addition to Thomas and Alexei, we also have Mr. Tadas Ratskauskas, who's from Lithuania. He's the Chief Development Officer. And also prior to joining Apollo Group, he also has like previous real estate experience, meaning that he was part of managing the Acropolis shopping centers. Now, when it comes to the separate businesses in our portfolio, then it's important to emphasize that each and every business has its own dedicated management team. And that kind of setup is pretty intentional because by having such kind of a setup, we are able to, first of all, decrease the key person risk across the group. Then we're also able to ensure that each and every business receives enough attention, and each and every business is run by people who actually know even the smallest details about that particular business. And every business is run relatively independently, meaning that in terms of daily operational decisions, they have the full independence. There are simply certain functions that we have centralized on the Apollo Group level because that enables us to achieve higher efficiency and also synergies across the different businesses. Now, moving on, Apollo Group is actually part of one of the largest and strongest investment groups in the Baltics called Group. Group with total assets in the size of 665 million euros and 340 million euros worth equity. And the Apollo Group is not the only asset in Group's portfolio. Group also has businesses from various different industries. So in addition to entertainment and catering, Group also owns businesses, for example, in media industry, in real estate, and also in various services industries.
Okay, thank you. And let's move to the financials and floor to Alexei.
Yeah, thanks, Thomas. So here we have our financial highlights for 2 periods, 2 full years, and partially for 9 months of ongoing financial year. So as you can see, our revenue year on year grew by 7% last year to 227 million. EBITDA at the same time grew faster at faster pace by 12% to roughly 40 million, which is a perfect illustration of our economy of scale. And we are sure that this tendency will continue for our future periods. Our assets amount to 245 million and have been on a steady level for past 2.5 years. Then below on the right side, you can see a graph which illustrates our capital structure. Here, I would point your attention to last column, which shows financial position as of end of January this year. And you see that as of today, we don't have any external financing at the Apollo Group level. So we're fully financed by owner. So 27.5 million is equity, classical equity. 64.5 is shareholder loan. And 3 million is overdraft, which is actually a group account managed by Group. So we use it to mitigate our cash flow fluctuations during big cash outflows. Yeah, so no financial external obligations. Everything is financed by the owner at the moment. Yeah, and yeah, so here let's start from the bottom right part. Also last column. Here we see how the financial structure, how it will look like after bond issue. So 25 million will be repaid to shareholder, again to actually achieve this greater financial independence from the owner. Again, this 25 million in terms will be used to decrease leverage at the Group level. And we have 50 million of debt to bondholders. So overall, we would have 90 million of external financing, 40 coming from owner, 50 from bond holders. And important to note that 40 million of owner loan will be subordinated to bond owners and can be repaid freely. Yeah. Then we have 3 ratios which are created to ensure financial stability and safety of bond owners. The first of them is ratios is the leverage ratio, which sets boundaries for taking loans for Apollo Group. So maximum amount is 3.4 times it's leverage ratio. Then adjusted equity ratio will follow our balance sheet structure and also put boundaries on equity size. It should be at minimum of 25%. And also interest coverage ratio, which demonstrate ability to serve bonds, should be below above 4. Important to know that this ratios will be monitored by external independent party on quarterly basis with appropriate confirmation to public.
Okay, thank you. And now to the most exciting part, the bond itself. So please listen.
Yes. So I would say if to look back at those 25 years that Apollo has been operating, then we can see that Apollo has gone through a very remarkable growth journey. But what is important to understand is that this growth has been gradual, step by step, both by introducing and developing new brands, but also by acquiring small competitors. And regarding acquiring small competitors, I think it's important to emphasize that each and every such kind of decision has been very carefully, strategically weighed. Because for us, it's not only important to buy additional revenue and scale, but also for us, it's very, very important that each and every brand fits perfectly into our existing brand portfolio, that the brands do not start cannibalizing each other. And of course, we are searching also synergies between different businesses. In addition to that, what is very important to us is that each and every business would eventually also become profitable. And by having such kind of careful and gradual growth strategy, we have ended up in the very moment we are today, which means that Apollo has become a relatively unique company when we look at the Baltic market. Because first of all, there are not many companies on the Baltic market which would have 1 million loyal customers. And secondly, when we look at the competitive landscape, then what we can say is that Apollo actually does not really have sizable competitors. Because if we look at the industries that we operate in, for example, catering and entertainment, then most of the companies who are operating on those sectors, they are relatively small, and usually they're also type of monoliners, which means that they have one or two smaller brands. So what we could say is that there is no such company who would have similar market size, who would have similar market power as Apollo has. And therefore, we have concluded that today is the right time to actually take the next step in our growth journey and take our first step in terms of becoming a listed company by issuing publicly traded bonds. And this decision has actually different various reasons. So first of all, we would definitely want our loyal customers to become our loyal investors, so we could actually share our success story with them. But also, what we can admit is that our longer term goal is to actually have an IPO. And from that perspective, taking the first step in becoming a public company is very important to us. And also the capital that we are raising through this bond issue, that enables us to enter our next growth phase. And it also enables us to become more independent from our parent company. So that's the overall background behind the bond issue. Now, more closely regarding the bond offering. So the total issue size will be up to 50 million euros. However, if there is oversubscription, then we also have the possibility to increase the size up to 70 million euros. It is a public offering in Estonia, Latvia, and Lithuania, and the bonds will be listed in Tallinn Nasdaq corporate bond main list. The nominal value of the bond is 500 euros. The interest is fixed 7% annually, and the interest payments are paid out quarterly. The maturity of the bond is 5 years, which means that the bonds will be issued on 20th of March 2026, and the maturity date will be 20th of March 2031. The issue is organized by LHV Pank. The legal advisor is Alex Raidla, and the trustee, meaning the legal counterparty who's representing the bond investors, will be Hedman Partners. Now, each and every loyalty program member who's subscribing to those bonds currently has also the opportunity to get a special status in our loyalty program, meaning they will get the status of Apollo investor in the app. And with that special status, they will get 4 free cinema tickets with star seats. They will get 15% discount on popcorn and certain drinks for a year. And also there will be special offers going forward developed. So in case you are a member of our loyalty program and you are going to subscribe the bonds right now, then it's very important that you actually also fill in the questionnaire, so we have information regarding you and your email address. And this special status should become available in the app within a month, roughly. Now, if you're interested in subscribing the bonds, then first of all, it's very important that you have a securities account. In case you don't have a securities account, then you can basically open one in any of the financial institutions across the Baltics who are offering investment services. And in case you want to subscribe the bonds by using your company or legal entity, then it's important to know that your company needs to have a lei code. The subscription starts essentially today, and it will end on March 16th. The ending time is officially 3:30. However, certain banks may actually close the subscription earlier in order to kind of gather the results. So we urge you not to leave it to the last minute. Then on March 18th, the results will be there and the allocation will be made. On March 20th, the bonds will be issued and they will end up on your securities account. And the tentative listing date for the bonds is March 23rd.
Okay, thank you. We have now gone more or less through our presentation. So I will leave this slide in front of you. Should answer the questions why to invest in Apollo Group bonds. So as has been said, that we're offering a stable fixed interest that is paid out quarterly of 7%, and with a large portfolio and a good scale across the Baltics in Finland, also covering more than 1 million loyal customer. It's a solid foundation for building this growth. And also our business model has proven to be quite resilient to the bit more turbulent times in the economy. So even if we have witnessed the maybe not so good economical situation, especially in Estonia and Finland in the recent years, Apollo has still shown the decent growth during that period. So this is about us, and we are ready for questions now.
Great. So let's move on to Q&A session. So we have gotten a first question. What caused loss at the interim 9-month statements? Is it related to acquisitions or the investments?
Yeah, we during 9 months we divested our one of our brands called Olivis in the Baltics. Decision was to exit from this was a business, as it turned out not to be completely in line with our core business activities, and that was a primary reason for accounting loss during that period. But again, EBITDA was positive, and EBITDA, of course, was positive. It was on the same level as last year. So operationally, we are doing the same and even better.
And what would be the recurring net profit estimate for the period related to the acquisition?
At the moment, I'm not in a position to give such estimates. Of course, our business is developing, and we are expecting results to improve even further.
Then there's a question, when are you planning to do your IPO?
So regarding the IPO, as I mentioned, it's definitely our long-term sort of a goal, but currently we have not made any decisions regarding the exact time frame. As I mentioned, for us, it's important first to take the first step in terms of becoming a public company. It's kind of an important criteria on its own because it sets a higher standard on the way that we operate. And of course, in terms of deciding when to do the IPO, I think it very much also depends on the sort of overall economic environment, the developments on the capital market. So yes, I'm not able to give a very kind of concrete time frame at this point.
Then there's a question, do you plan to enter other countries in addition to your existing markets? And if so, will the expansion be organic or through M&A?
Well, our main expansion focus in coming years goes to Finland and Lithuania, and also with part of the raised money we are planning to invest into the central production in Riga. However, if we see any feasible M&A opportunities either in the home markets or outside of the home markets, then we certainly carefully consider it, and if it fits to our brand portfolio, then we are also ready to move quickly and acquire some new businesses. But what has been said is that roughly three-thirds of our planned growth is coming from the existing brands in the existing markets. So yeah, we are mainly focusing on expanding the existing businesses.
Then there's a question about how you can justify the pricing of the bond issue. You're aiming for 7% with an unsecured bond.
Yes, 7% and the unsecured bond. So basically the price was developed based on looking at the sort of comparable issues that we have had on the market. So 7% seemed to be like a win-win offering, meaning that it's still interesting to us from that perspective. Obviously, for us, it's also important to make sure that the price at which we are raising the capital is also attractive to us, because it's kind of not the only option that is available to us. So with a careful consideration, also discussing with our partner, also having this kind of market sounding with the institutional investors, because we're also expecting the institutional investors to join the offering and subscribe. So it seemed like a great compromise for everybody at this point.
Yeah, and it is important to my mind to know that group does not have any external debt. So the only debt which will remain besides bonds is a shareholders loan, which is effectively, not factually, is factually subordinated to bond debt.
Then there's a question, how sensitive is your business to general macroeconomic conditions?
I would say that our prognosis are not done on a basis that everything goes really smoothly and really well. So we have considered that if there is a slight downturn in the economy and then demand, then our figures still hold. And as I said, that during the last couple of years, when the economy hasn't done so well, especially in Estonia and in Finland, our business has been growing quite nicely. And we see that since we don't sell high-end products or high-end entertainment, then people rather they might skip some family travel to the south or perhaps not going that much to the fine dining venues, but our kind of affordable entertainment and dining options are still widely used. So we are quite confident on that even if the economy is not doing exactly very well, then our concepts would work despite that.
And why did you decide to issue a bond instead of taking a traditional bank loan?
So why we prefer a bond issue? There are different various reasons. One of the reasons is definitely the fact that normally a bank loan, a traditional bank loan, would assume that you also service principal payments. Whereas with the bond, you basically only pay interest. And for us, also considering the upcoming investment plans, that seemed like a more suitable option in terms of managing our cash flows. But that's definitely not the only reason. As I mentioned, we are also in the sort of longer term planning to have an IPO, and therefore becoming a public company and taking the first step is actually a goal on its own, because as I mentioned, it sets a higher standard in terms of how we operate.
And then there's extra question regarding it. Why shareholder needs his loan to be paid back?
You will take it. Or decrease of leverage at an group level. Why it's important, I would say.
Well, basically, it's a strategic decision made by the management of Group. So yeah, it's not, I would say, so much in the scope of what we are doing at the Apollo level.
Yeah, we mentioned it because we wanted to make sure that owner, does not just take dividends and getting out of business. It's just the use to reduce leverage, and it's let's say honest reason to do so.
And perhaps it's also good to mention as a side remark that if we look at the whole history that Apollo Group has been part of the Group, then Group has never ever taken out dividends from Apollo. So I think that also kind of demonstrates the importance of Apollo from Group perspective.
Yeah, and commitment for further development of the group.
Thank you. I think that's it with the questions, and thank you for the presentation and all of the answered questions. And the recording of the webinar will be made available shortly on the Nasdaq Baltic YouTube channel as well. And please follow Apollo Group's announcements to stay up to date with the company's latest news. And and perhaps a few words on your side as well.
Yes, thank you from our side for watching and listening and asking the questions. I hope that our story is appealing and you will join us for our growth story for the next 5 years. So thank you.
Take care.